Hello, everybody. This is a take two. 3:08 a.m. because I screwed up on an hour-long blabbing into a mic that wasn't recording. But anyways, we're doing it version two. So here we are. We're going to talk about my trading in the last month, and I'm on Interactive Brokers, trading U.S. listed stocks. We are going to go over the numbers, and I've been talking about this 4 weeks ago. So I'm in my week four, just completed my fourth week of this, and I've given you the numbers on basically. Let me just log in here. Am I in? Yes, I am. Okay, so here's the numbers for the standard benchmark S&P 500, 5-day view, weekly view. We're down negative 4.55% with S&P 500. 1 month we're down negative 5.6. And yearly so far, we're down negative 8.15%. So not very good because February was not strong, January was strong. Meanwhile, March is probably going to turn out to be a disaster with this banking collapse of the Silicon Valley Bank, which I covered in two separate podcasts I'm putting up tonight, along with this one. So you're here to hear my numbers against the standard benchmark. All right, so here we go. Okay, 7 day weekly view. I'm up positive 1.08%. So again, over the same time period for the S&P, I'm positive 1.08, and the 5-day or weekly view for the S&P 500, and I'm using this on Market Watch as of today, March 12th, 3:10 a.m. So it is down negative 4.55%, and again, I'm up positive 1.08%. So I'm roughly close to 5% beating that on a weekly view. Now, going over to the monthly view, um, I am up 0.21% in the 1 month view. For the S&P 500 was negative 5.6. So I beat that by roughly, well, let's just say 5%. So I'm barely positive there, but I'll take it because I beat it, and I'm positive too. So what does that mean? Well, we're now on a precipice where we could be in a major, major calamity with the SBV bank collapsing, Silvergate, one of the other big banks reporting. So the U.S. government, they just announced a while back that they're probably putting together a special fund for all the people affected by this. They said this is the second biggest collapse. So this week could be a disaster. I'm not sure if I'll be trading at all. It's obviously you're putting yourself into a environment of falling knives, which is not wise. But just so you know, I've redeveloped my analytic on the how the stock picks are made and new criteria I'm using instead of using the OpenBB on my post I posted yesterday about OpenBB just being a really not a great managed project, and I'm moving off to something I've developed on my own using good old Python. Anyways, so I have that in place. We'll see how that goes. I've already identified seems to be some fairly strong companies, and anyways, we'll see how that goes. So I may or may not trade come Monday. But let's talk about you, right? So you, unfortunately, are not in a good position. And I say that because, well, you could be affected by a bank that may could collapse on you. So there, kiss your savings goodbye. Uh, I'm already reporting to you that we're not having a very good year in the stock market, down 5.6% as of today, again, March 12th. And yeah, so I'm able to beat the market. Now, I have not mentioned that's 1 week. For the last 4 weeks, I've only had one losing week, which was last week, but the first 2 weeks were positive and beating the markets again. So 3 out of 4 weeks. Now, one other big thing that may help you. Again, we've got layoffs happening. I just did the scan of the performing sectors. Believe me, nothing's performing right now. It's all negative. The only things that are performing, unless it's a short ETF or a bearish ETF, that's the only thing that's making money right now. And we're talking pretty well everything out there, namely in the actually I can tell you right now. Uh no. Let's see here. I can pull up my most recent spreadsheet here. Yeah, bringing it up. Okay, so looking at the markets right now, this is pretty scary stuff because right now, um, sort this. And again, like I said, we're in an environment with a lot of layoffs. When you look at Meta, Facebook, they're going through their third round. And that's kind of standard in a recession. But what makes it different is we've got automation out there. Automation replacing lots of factory jobs. Truckers going to be affected soon with the new Tesla rig. As I said, Amazon's got a whole suite of robots running around in their warehouses. We've got car manufacturing. Most of it's now. We've got robots building cars, and as I said, the transportation field will be heavily affected as cars go autonomous. Trucking will go autonomous. Restaurants will probably become more like kiosks, like with what McDonald's is trying to do, and do away with a lot of waiters and waitresses, as many people don't want to work in those industries. One thing I mentioned in my last talking in the mic and nothing again recording session is how we're in an environment now where the unemployment's 3-4%, but I think it's a lot higher because the Federal Reserve has redefined the data about 10, close to 10 years ago. And one of the big factors when they classify unemployment, if you're looking for a job, you're not classified as unemployed. Or no, that's not true. If you just got laid off and you're on living on on your when you get paid out for 2 months, let's say severance, you're not unemployed. And people are not classified as being in the job market if they're self-employed, meaning that a lot of these people where the so-called work shortages are, I think a lot of them are making money online and they're not being counted. They're not being represented because they found ways to make money or be in the gig economy, like with an Uber, driving, and all that nonsense. So I don't know. That's where things are distorted. The other thing is, if you're in a career, we got something now to worry about with this AI thing called Chat GPT. So that's now threatening the work of journalists, people that push paper, that do analysis, obviously software development, engineering, and that all that stuff is going to potentially get replaced by an AI. And companies love it because now they can automate all these processes that used to pay out for staffing are now going to be run by AI. And they don't call in sick. They don't want to be unionized, da 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 da. So, yes, big corporations are going to promote that, want that. Even smaller businesses, as new companies come aboard to offer those kind of services. So, essentially, a lot of people will be affected by all this automation in the near future or currently as we speak. The thing is that when it comes to this recession, as I said about a year ago, this is not going to be your granddaddy's recession. I do think a lot of people are not going to make it economically, being able to economically survive. Whereas I'm just posted another podcast tonight on the title from an article, a really good article. It's pretty evident. It's called Don't Chase Money, Chase Wealth. And those whole process you may have heard, but I just kind of reiterate it and give you my own spin on it. But we're now in a point where in that article it says you need to know technology, i.e., software development to control your own. And when you look at the new economies coming with the new Web3, how the is going to run with the decentralization, how the financial with the NFT and the blockchain, that's going to revolutionize how uh, we participate in the new economy coming, and that's scaring a lot of the banks and whatnot. As I stated in another podcast I did on USDC stablecoin about one of the Nick Carter venture capitalist calling it choke point two. And that's true now. I really strongly believe in that. So what I'm trying to tell you is you will need to start looking for new solutions to secure your future. Huh, hello, that's what I do. So right now, over the last 2 weeks, on purposely, I didn't expect this, but I did my last webinar was on, of all things, startup investing, and what happens a few days later is you get the uh, Silicon Valley Bank goes bankrupt and affects how many, how many startups? Funny, eh? Anyways, there's that one video. I've got videos on ESG, how that can ruin your future, how not to rely on dividend income because companies can cut you or reduce their payout. They have no obligation to people collecting dividend income. And those companies that usually promote it are not the star performers out there. They do. I did an analysis on some of the companies that I traded in that were profitable for as I said, the 4 weeks where I beat the market 3 out of 4 weeks. Yay, yay, yay. Good job. And that all those companies paid out at the most 4%. So if you're involved with those kind of companies, yeah, dividend income works. But I can promise you those companies will not last more than a month. They just have a sudden run up for whatever reason, a good day, well managed, da da da. Da. Will they continue to move up? No, not from what I've seen. I thought the mining companies would do well. No, specifically gold miners, because you think gold is up with all this calamity and whatnot. I ain't seeing it. As I said, of all the sectors that I'm talking about here, these all sound great. You know, we got U.S. small caps, SPACs, Nasdaq, material, biotech, health, real estate, Dow Jones, commodity, ESG, all producing 1% for the month. Treasury in there as well. I went through all those, and funny enough, these are all short ETFs. These are all bearish ETFs. Those are the ones making money. That just goes to show you what's going on in the economies right now. It's all short. It's all bearish. And I try to play those, and you can lose a lot of money when the markets turn because they can turn pretty fast, like it turned negative in the last few days. So I'm not comfortable trading those, but if it continues, maybe it is easy money. I don't know. But be aware, but that's where you can make money is in the shorting and bearish ETFs right now. So last year, for a good chunk of 2022, I would say maybe at best, 10% of ETFs were making money. And a lot of them were junky because they just held weird swaps. And we know about that with the monkey business of the crony bankers as well as US Treasury. And what did I just say? It ain't making money. Treasury bonds will give you a decent run up. But I think it's a distorted place to have your money. Anyways, I'm not going to go on about that. But at the end of the day, we've got a process that I'm hoping works. So here's the deal. I'm beating the markets for the last 4 weeks. Let's say I do it again in the next 2 months. Does that mean my value has doubled? I do it in 3 months. Does that mean my value has now tripled? So if that process proves itself for the next month, 2 months, you have a process that makes money. I'm beating it. So what can I do? I can showcase my trading, not the actual trades on when they happen, but I can show you the trading results. And that's one of the big steps I'm planning to do this week. Uh, so if you want to know more, what I would recommend you do, and you'll get access to all these free videos I mentioned on all those topics, ESG, dividend income, and reasons why you should kind of know what you should know about it. Some crypto areas where you probably can make good money. I mean, this is the future of money. Yeah, they get access to all those videos for the last bunch of webinars. I don't know how many hours it is, quite a bit. But hey, it's free. If you want access to it, just go to quantlabs.net/banking. Let me repeat that. Quantlabs.net/bank. I'll put that in the description. You can find it. Go there, sign up, and get yourself some access to some pretty good videos on those topics. So, the other big thing I'm planning to do is to showcase the actual trading results where it will be verifiable. So when I say it's verifiable, that means it's going to be part of a journaling service that you can have your trading account. In my case, Interactive Brokers. It'll be showcased up to 24 hours, um, and it'll show you the results. So if I'm able to do that, and as I said, continue beating the market, continue beating the S&P as I repeated here, by let's say in this last week by 5%, last month by 5%, roughly. That's pretty good. And maybe from the stats that I've seen, maybe 1% of the trading trading community does that, and maybe at best 10% of financial advisors do that. So if you've already probably had a bad year last year, this last year was just a run up. This year could get worse, and that will affect your RSPs, your 401, all your retirement. You will not be in a position where you will most likely have to stay on to work. And obviously your financial advisors make having you lose money. I got one that's bragging, well, you're only losing 6%, but you could have lost 20%. I mean, when you're losing money like that, and you're getting close to retirement, that's a scary position to be in. As I said, if you think dividend income is going to save you, look at Intel, look at some of the mining companies. They cut, not just cut, they eliminated their dividend income because a lot of these companies are going to go into financial trouble from what I'm seeing. Just tonight, I'm looking at 2%, 3% down since the calamity of what happened on Thursday, Friday. This could be a long term thing. And you think a company will still pay out dividends? They don't need to. And maybe if this continues, they won't. So you'll be forced to look at other places to go. Now, most people will think that gold is doing well. Well, let me tell you, right now in the ranking I got, gold is giving you, this was generated March 10th. Gold is giving you 1.22%, and that's in the hole. So those are ETFs, once again, that are shorts and bearish ETFs. I think it's one only. All of them are probably losing money. So you will not be able to sit there and rely on gold, silver, and all these, what you read and see on places like YouTube. So again, if I have what's verifiable, yeah, you'll want to follow people like me where they have a verifiable trading account, live trading and near uh, the 24 hours, okay? Because that's going to be crucial for your probably your economic survival. A lot of people will get laid off and they may not get new jobs because the market, a lot of the big companies are automating, and that's the future. As I said, ChatGPT is the latest example. Facebook, Lambda, Google's bringing theirs out. I'm sure Amazon's got theirs as well. So these will be new options available for these companies to automate a lot of processes for a lot of for a lot of big business. Which I don't know what you do. And as I said, trucking, restaurants, service industries will be majorly affected by this. So yeah, and now I've just given you the returns so far on the markets are negative. So and we haven't even talked about inflation as well. So you're losing money there. And if you have not heard with the latest budget coming out of Mr. Biden, they're wanting to double the capital gains from 20% to just under 40%. So it's going to get harder and harder to make money, retain money, more importantly, to say to preserve your wealth. You're probably losing out on your wealth. So again, if you want to get yourself educated with what I do, go to quantlabs.net/banking. You'll be sent an email with two links, and the first one will give you access to the free stuff with all the videos I've already mentioned. So that's all you need to do. Again, beating the markets this week, 3 out of 4 weeks in the last month. That's pretty good considering how challenged we are in the markets. And as I said, you can expect those prices that I got currently will be going up quite a bit as I've got the proof and the receipts to show that, yeah, maybe this does work. And I think it does. I'm feeling pretty confident because I've rearranged my criteria to look for even better stock picks, as I hinted in my article on OpenBB, the software I relied on, which you can find at quantlabs.net/blog. That's one of the more recent articles. Anyways, we'll leave it at that. Thanks for listening. Again, go over to quantlabs.net slash banking, and you get signed up to your get access, free access to all those past recorded webinars. And it's hours upon hours, but there's a lot of good learning material that you may want to know about. Other than that, thanks for listening. We shall talk to you later. Have yourselves a good day.